The new trading week kicked off with renewed concerns about the COVID-19 pandemic. Europe is facing the threat of a second wave of the epidemic. For instance, after the easing of quarantine measures, there was an increase in the number of infected people in Germany, and a large number of new cases were registered over the past months in China and South Korea. Meanwhile, 4,190,000 people have tested positive for the coronavirus worldwide. Investors returned to the stock market amid a possible threat of a second wave. European, US and Asian index quotes are declining again. As for the Forex market, traders remain cautious. The euro-dollar pair started the trading session with a slight drop, still near the 1.0815 level. The pair is trading sideways between 1.0850 and 1.0815 amid negative economic news from both the United States and the euro area. To resume the upward movement, the pair should consolidate above the level of 1.0880. However, such a scenario may turn into life only if there is some positive fundamental data. Yet today's economic calendar lacks any important economic reports. Only the Fed representatives will deliver a speech on the current state of the world and American economy and its outlook. Many experts suppose that the forecast is likely to be rather grim. However, investors are more interested in the US inflation data, which is due tomorrow. In March, consumer prices were already affected by the coronavirus outbreak, dropping by 0.4% on a monthly basis. This is why in April they are highly likely to decline again. Besides, market participants are awaiting tomorrow's data on China's inflation. If the readings turns out to be worse than expected, the risk appetite and the US dollar will rise significantly. However, if the fugue is positive, the US dollar will tumble. The movement of the pound sterling will be determined after the release of the UK GDP data on Wednesday as well. Currently, traders are focusing their attention on the pound sterling. At the beginning of the day, the British currency fell deeper. The pound was weakened after the announcement that Boris Johnson would deliver a speech on Monday. He is expected to explain any changes to lockdown measures, and investors assume that the quarantine measures will remain in force. The pound sterling dived, fixing near a strong support level at 1.2300. Judging by the technical analyst, it's not recommended to open short deals. It's better to wait for an upward correction and open deals after the quote rises above 1.2358. If so, the pound sterling may well grow to 1.2401. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.